Hello everyone, happy Sunday. This is Simon with AvaTrade. I want to welcome everyone to our webinar and a special welcome, of course, to new people. And what we'll do here, it's pretty much reflected in the title, your weekly trading plan. And I keep on saying the same thing every week. Of course, it's addressed to the new people. What we're trying to do here is basically create a structure, create a plan. And as you know, in anything, and especially in trading, it is important to have a plan, have a structure, remove any kind of impulsive actions. And that's what we're trying to do here. And as traders like to say, you plan the trade and then you trade the plan. And it really doesn't guarantee any results, of course, but definitely makes things a little bit more organized and more structured. And that's the whole idea of what we do here. A few things about myself. Simon Friedman, that's me, Senior Account Manager with AvaTrade. And it is actually 23 years. I need to change the date. I started in June of 2000. And I started as a proprietary trader back in New York. I was licensed. I worked, I think, in about three different proprietary day trading firms. I did it for about 11 years. And then I moved down to a less stressful environment. I continued trading, of course, and I started to mentor and educate customers. At that point, the traders. And I'm very happy that I have an opportunity to work with the customers of AvaTrade, and I'm trying to really share as much as I can to help them with their trading. What the structure or agenda of the webinar is pretty much the same every week. We'll talk a little bit about the big picture, and then we'll talk about indices, stocks, commodities, Forex, and usually we'll do it this way. And risk warning, you can find a full document at avatrade.com. What we'll do here, it's purely educational, and of course, we do not suggest any trades. Now, these are the channels that would be great for you to follow if you're not yet. You have Twitter, you have Telegram, and my favorite YouTube channel. And why is it my favorite? Of course, as the most things stored there. Most of the webinars, if not all the webinars, are being posted there. So if in case you missed the webinar, you were busy, you didn't have time, you can go back and watch it at your convenient time. You have a lot of tutorials, educational materials, and so on. It's a great source of support and education. So you can just subscribe and click on the that small bell, I guess, where you can be notified when new things are being posted. We'll start with economic calendar in a moment, but I just want to share the highlights of the last week. The whole pressure was on the debt ceiling. The deal was in the air, and then it was passed in the House and then the Senate. And the latest news that President Biden actually announced, and he signed it. So on Saturday it was done. So it's done deal, and basically the ceiling was removed until 2025, until after the elections of 2024. In a way, it sounds like they really did a good job to avoid potential collapse in economy and banks as well. So that's a positive thing. And let's see how it works, how the spending works, how issuing treasuries work, and so on. I guess we'll hear more details and more outcomes of this action. But as of now, at least it looks like they avoided that crisis or collapse. So that's the highlight. Then Friday we had NFP numbers. The numbers were huge for the jobs added. It was expected 190,000 jobs, and the result was for May 339,000 jobs. That's a strong number. On the other hand, the unemployment rose to 3.7 from 3.5, and the market reacted in a positive way. When we get to see the indices and stocks, we will see a bigger picture there. Okay, and let's go to economic calendar. Again, for new people, a few words about the importance of economic calendar. Of course, the technical traders and the fundamental traders, definitely fundamental traders, are paying more attention to these things. But I think even for technical traders, it's important to know that certain things are being announced at a certain day and time. And to be just simply logical and practical, nobody wants to get caught in a trade when certain things that come up on the news are going to affect one way or another that instrument or that market that we trade. So here I take out the high impact events. You can find the economic calendar on our web trader or the app. Or any provider of the economic calendar. You can just Google if you'd like. And here what I do, I take out the high impacts. You could see here everything in red. So there are definitely more events that you can look into. You can choose what's relevant for your trading as far as what country, what markets, and so on you're working with. And let's go through it really quick. Monday, we have the PMI numbers from US, important. Tuesday, another interest rate decision from Bank of Australia. Retail sales from European Union. Then we have Governor of Bank of Australia speaking that day as well. On Wednesday, GDP number from Australia. Interest rate decision from Canada. And GDP numbers from Japan. That's Wednesday. Thursday, we have a trade balance again from Australia, GDP numbers from European Union, CPI numbers from China. China is really being followed lately. Chinese market's been selling. Let's see how this week will play for China. We have employment data for Canada this week. Usually they come together with US. I guess they're doing it a week later. So these are the things in upcoming week. Again, these are just high impact events. You can find much more on the calendar. Okay, so let's see a few things that I prepare also. This is what I just shared with you, that the debt ceiling bill was signed. You can find this article. This is from marketwatch.com. It says more details. I'm not going to go into it, but you see a beautiful picture of the president, and it looks like we are saved by the bell, as they say, because the deadline was until the 5th of June, which is on Monday. So Saturday, it was signed right here. So that's one thing. Another thing I wanted to show you, these are the VIX. If you're familiar with it, you call it a fear index, a volatility index, the different names they use. Basically, what happens when the market goes up, VIX are going down and vice versa. Here, when the VIX are running to critical highs, that's what the market is selling. So normally around 17, 18, the VIX are showing that the market is kind of overbought, and we see the turnaround. Currently, we've been going on the VIX down for a few straight days, 1, 2, 3, 4, 5, 6 straight days, and we just made a low. We closed at 14.6. So let's see. Again, we might continue lower, and the market might continue higher. And definitely some investors are looking into this as potential reversal of the market as well. So I guess the time will show. I just wanted to show this to you. Okay, so let's move now to the MT4, and we start analyzing or start looking into some markets. And we start with indices. So this week, or Friday especially, we had a huge move on Dow Jones. Dow Jones moved about 700 points. Let's bring it up. was a very strong move on Dow Jones to the upside. So it moved on Friday alone about 2.1% strong move. And for the week, it also made a 2% increase. S&P 500 gained about 61 point and up about 1.5% on Friday. And for the week, it's up 1.8%. And NASDAQ is up for the week about 2% and 1% alone on Friday. Now, generally, if you're looking at these indices, NASDAQ definitely looks the strongest as technology stocks recovered. A lot of it to do with NVIDIA stock. I don't know if you follow that, but last week the stock reached, I think, $415 or so. And for the first time, it reached the market capitalization of 1 trillion. Just another company hit it. It didn't hold. It went back below 400, I believe, but it moved higher. And if you're following NVIDIA, you know that the whole idea is really with their chips that are creating super chips to support the new wave of artificial intelligence computers and things that are developing. So NASDAQ, as you could see, very strong. It's on the way, possible to 15,000, where we are. We were here back in March or end of March of 2022. There is a potential. If you take a look at S&P 500, we are trying to break the resistance of August of last year. This is March right here. So we need to first fight this latest resistance from August. And if you take a look at Dow Jones, it looks the weakest. We still didn't break this recent resistance from April or the end of April, as Dow Jones was the weakest out of 3 US indices. So we'll be watching this week. Definitely reaction for the debt ceiling final approval and the data that's coming out. European indices, let's take a look really quick. It was a little bit of recovery for the last 2 days of the week of FTSE, of the UK index. And it's been a recent sell-off. We are above 200 moving average again. We are kind of a midway between the 200 and the 100 moving average. It looks like it's catching up with the US market. And let's see if this move continues. DAX is holding strong after a few corrections here. We are sticking to the highs, as you could see here. We are holding at close to all-time highs on DAX, and we have some European data coming out. So let's see if this move continues, or we might see reversal and moving to the downside. French index, after refusing or failing to break the highs again, we had 2 weeks of selling. And Friday, of course, in sympathy to US markets, it's moving higher. Let's see if this time will challenge that all-time highs. Nifty 50, the Indian index, it's back to business, as we mentioned a few weeks in a row. We are, after this recent sell-off that finished in March, we start going higher, and we are on the way to retest the all-time highs. It looks like it. Yeah, all-time highs we reached back in December of 2022, and the high there was 19,030. We're about 300, a little bit less than 300 points away. So it looks like a very nice recovery. Definitely worth watching the index. Okay, let's move to stocks, individual stocks, and I would like to start with Apple. Actually, this upcoming week, Apple is revealing the virtual and augmented reality headset the first time, and they're just introducing the new category, because when we hear Apple, what comes to mind? First of all, of course, the iPhone and iPads and iPods and Macs and notebooks and PCs and so on. So now it's a new product coming out, so they're revealing it or showing it at this coming week. So let's see how the investors and traders will react to that. Apple stock's been strong. We are, it looks like it, at the all-time highs. We are about to hit it actually. Back in December 2021, the stock was at 181.92, almost 182. The following month, it hit the level of 182.73. And this month, the high so far, 181.65. We're about $1 short of the all-time highs. And of course, I think the happiest in Apple stock is Warren Buffett, I believe, as they heavily involved in Apple. And I just read over the weekend, I don't remember exact the numbers, but really I was shocked. The main loading of the stock for Berkshire Hathaway happened from 2016, 2018. And I think the average price, let's see if I remember that correctly, I think I read the average price was about $36 or $34. Let's see what's the price for they're on there. 2000, no, doesn't make sense. Actually, it does. Here you go. Yeah, makes sense. In mid-30s, they bought most of the stock. So they're happy campers, I think, making a lot of billions of dollars. So the average price, as they said, was about $34, $36. Currently, it's at 180. So you do the math. It looks like Warren Buffett knows something. Just a remark. Okay, so Apple stock, again, we said this upcoming week, introduction to the new product. Let's see how that affects the price. Google, what caught my attention in Google here, that the market made a huge move to the upside on Friday, and Google really hesitated to break the recent highs. So it could be, if you approach it in a relevant strength idea, that the market's going higher, but Google might be getting out of steam. That means when the market start cooling, we might see the pullback, and Google will be watching that definitely. So we are trading around $125. Netflix is the other one that had a nice move recently as they implementing this new policy of the password sharing. We discussed that already a few times. So also we tried to run the Thursday and Friday was the strong on the market, but Netflix didn't run any higher. So it could be this 400 key level is something serious that the stock has a problem to break. And also on the weekly chart, we see that we're hitting the 200 moving average on the weekly chart. So that could be also indication that we could be reaching the top, at least for now. So that's on Netflix. Tesla is strong. And again, as I mentioned to you, if you remember, that since the new CEO of Twitter was appointed, everybody got kind of excited that finally Elon Musk will be focusing on Tesla, and it worked out. And here also we're reaching about $215, and that was the top back in February, from which we sold a little bit with zigzagging to the downside. So here as well, we could be having a hard time breaking it or not, or we might be finally breaking it to the upside and going towards 300, also a possibility. Just to remind you that we were at much higher prices not so long ago. So that's on Tesla. Definitely worth watching bank stocks, as this final resolution for the debt ceiling, it should be a little bit of good news for the banks. And you see that on Friday, JP Morgan reacted as it looks JP Morgan as being the strongest out of the whole group. So it was a nice reaction with the gap and continuation to the upside. Citibank also reacted to the upside. Bank of America trying to move higher here, and Goldman as well had a move on Friday to the upside. So definitely worth continuing watching the bank stocks on a possible rebounds from here, as the threat of collapse due to the debt ceiling issue is kind of solved for now. A few more stocks that caught my attention. AT&T is one of them. As you could see here, we hit the previous resistance around $15 and we bounced. So here it was moved to the upside, then we gapped down on Friday and continued higher. So let's see if this was the bottom or we're going lower. On the weekly chart, it looks like the support is being retested here, and if we are holding it, we might see the bounce to the upside, or the opposite scenario could be played where we break and continue lower from here as well. Johnson & Johnson, pharmaceutical company. Here as well, we are facing, or at least kind of approving this support from which we had this recent move to the upside. We hit 153, and the last few days we're kind of trying to break out of this a level here around 155, and it was a nice move to the upside on Friday. We might see continuation to the upside as well, so we'll be watching this Johnson & Johnson, or we might come and try to retest this support around 153 again. If we are holding it, we might see continuation to the upside. And the opposite, if we break below 153, start building the resistance here, we might see continuation to the downside. So, and the last one that sometimes we talk about it actually is the Teva Pharmaceutical. As you could see, I mentioned a few times we were trading between $8 and $11, zigzagging for a while. And here we have four consecutive weeks to the downside. And you could see this week was a strong move from $7. So some traders might look into it as an opportunity to buy around here, as $7 being a support. Again, it doesn't mean that it couldn't break it. If we zoom out of here, we've been in this channel for a while, right? So some traders might be looking to buy with a small stop here of 20, 30, 50 cents, whatever the stop they choose to have, of a potential of another bounce to the upside. So something to pay attention to. Okay, let's move to commodities. We'll start with gold. Gold had a sell-off on Friday as the market had a huge move to the upside. We are below the key level that we mentioned, 1955, and we are approaching the 100 moving average over here. So what happened? This level was a support for a while. As you could see here, we bounced from here and then we went making all-time high over here. That was May 3rd. Exactly a month ago, and then from there we were sliding lower. We hit the 100 moving average. We bounced above the 1955 level, and on Friday on the strong market we moved lower. So again, as I mentioned, besides other reasons, one of the big reasons of gold going lower is being a safe haven. So the moment the risk on is turned on, the moment the stocks are running up, the money is being taken out of gold and put into risk assets as equity markets and vice versa. So if the market continues high here, the excitement for debt ceiling issue being solved and other things, we might see gold going and retesting lower levels here. And if market will cool down and have a reversal to the downside, gold might climb above 1955. It could go straight up or start establishing the support. As you could see, this level around 1950, 1955, it's a key level. So we'll be definitely watching gold at this level. Oil had a nice move with the market on the excitement that economy might be okay or better. Thursday and Friday, we moved to the upside. And let's see if this is sustainable, if we can go and see 73 being retested, or the reversal will happen. Natural gas, our poor natural gas that we're watching every week. It tried very hard to break through 260, couldn't, and we're back at 212, 211, the level from which we bounced a few times. This is the first time we bounced back in February. The low here was 211. You remember we spoke about it, then we held, broke below, and so on. And we're back to that level again. On Thursday, we hit the low of 213, and Friday we hit the low of 213. So we are holding this 213 level. Again, anything can happen. We can just break and tank from here to the downside, as a lot of pressure is to the downside, or at some point we might see a move to the upside. And again, very simple. We need to break the 260 again, and then this level that we tried back in March, we hit 302, and then we had the lower low from there. So definitely a lot of traders, a lot of investors are watching natural gas. Some of them are sitting in long positions and hoping for recovery, and others possibly short and looking for final break to the downside. So this channel has been there for a long time, as you could see here, right? We've been channeling 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 14, 16, 18 weeks, right? Or easier to count here, you have 5 months of sitting in the channel. So that's as far as natural gas. Now, soft commodities had a nice move this week. Let's take a look at our usual suspects. Wheat had a 3-day recovery to the upside after being sold. We hit on Wednesday the low of 573. Let's see if after this accumulation we'll have some strength to move higher and retest the 650 area or higher. That's on wheat. Corn, very nice recovery here after this gap. We are moving higher, maybe retesting the 50 moving average, and if we break to the upside, we might actually try to close this gap on corn and soybeans as well. After a recent sell-off, we are trying to break back above this support level that we had back in October of last year. And if we start establishing new support around about the 1,355-ish, we might actually continue to the upside here. So that's as far as soft commodities. Let's move to Forex, and we start with dollar index as usual. Dollar index on Thursday is sold, and Friday tried to recover. We are holding around 104. If you zoom out to weekly chart, we had a double bottom here. As you could see, the first move started at the end of January, with the low being around 100.6, and then we hit it again here with the low 100.44. That was beginning of the first week of April, and we really tried to break that between 100 and 101, and finally we moved to the upside. We had 3 consecutive weeks to the upside, a very strong move on the dollar, and this past week we are in red, and let's see how this week will show. If we are breaking through 104.5, we might go and retest 105 and higher. We are above 50 in the 100 moving average, and this 105, 105.30 area would be hitting the 200 moving average. So let's see if that happens. Now, As you see, the dollar is holding strong, and let's take a look at few dollar pairs and see how they really are working out. And I want to start with ZAR. Actually, a lot of South African customers, of course, are trading it. And it was a recent interest rate decision from South Africa. And economy there is definitely not doing that great. And actually, I want to share with you, and this was the reason last week we didn't have the webinar. I actually traveled to South Africa. I was there for a week in the Cape Town area. Interesting place. One thing that was kind of shocking, that's the issue with electricity. I was staying with my friend, and there are hours of the day that the electricity was just not there, and they announced it ahead of time. There's a schedule, and I spoke with some people, some business people, and really businesses are suffering. Imagine, even if you have just a bakery, we're not talking about big production, but bakery or any kind of business, a restaurant, and certain hours you just don't have electricity, so your business suffers. And that issue is just getting more intense and more serious. So economy, because of that, or because one of the reasons being electricity is not doing that great. So as you could see, the local currency is being reflected. It's been a lot of weakness, and recently we just hit, in the past few weeks, we hit the all-time low for the ZAR. And definitely it could get worse with the situation there. And with the strength of a dollar, definitely is not helping to this pair. So as you could see, the dollar is at the record highs against the ZAR, so definitely worth watching. We might continue higher from here. We might see correction. As you could see here on the weekly chart, around 18.5 was a lot of actions. We tried to break through it for a few consecutive weeks, then we gave up, then we tried again, and then we broke to the all-time highs about a month ago, beginning of the first week of May, and we are holding there. So very serious situation here to watch. Now, USDCAD sold the past week, of course. As you know, or you might know, the Canadian dollar is highly connected to the price of oil. And as oil went up, the Canadian dollar got stronger. And as you could see, it has a nice sell-off on USDCAD here. Now, on the flip side, if you mention last week or the last time or the week before, we mentioned the Swiss franc, that at some point dollar might have that attempt to break to the upside after a long time sell-off over here, and it looks like it's working for now. We had few consecutive weeks to the upside, including the last week. So we did break through this 0.90, and we are on the way to 0.91. We tested it this week a few times, and we might continue to the upside. And if we are selling, we're probably going to be facing again 0.9, and we'll try to build support, or we break straight lower here. But this level of 0.9 will be really a big battle if we come back here, and they might try to establish support here for next move to the upside. And the major currency, of course, currencies, euro is continuing being weak against dollar. Pound is approaching this 124.30 area, where it was a strong support as well. Let's see if we're holding this support or we continue lower over here. Now, another pair that, of course, being closely watched, that's the dollar yen. It's been strong, as again, to remind you that Bank of Japan haven't done anything to increase the value of the yen. There was no increase in interest rate. And as you could see, dollar has been very strong against the yen. It was a nice correction here, and then Friday we are moving higher here. So let's see if that continues. And another pair that kind of caught my attention, as you could see here on the daily chart, we hit a level here from which we had a nice move to the upside. around 0.85, 0.86 here, and we bounced on Friday. So if we start establishing nice support here above the 0.86 area, we might see continuation to the upside. As you could see, that this move came to a lot of actions here from which we made a high. So we're at the same point right now. Let's see if this support builds up and we continue moving higher on this pair. And the last one that kind of regular for us, as you remember, Euro Aussie. We spoke about it last meeting. We said that we're back at the key level 162.25. We did have a nice move to the upside to as high as 165, nice, almost 300 pips. And then we came right back and we closed below it. So here, it's very tricky. We actually, this time, we might start building resistance here and continue lower. Or if we lift our head above that level again and start building support, it's going to be the same action all over. And it looks like traders are kind of liking it, trading this channel between around 200 pips. Somebody with a lot of guts probably held this move here as well, but then it was a reversal. So in any event, between 162 and 164, it looks like this channel has been a lot of activity. And we might see a repetition of the same thing unless we decide to go lower from this point. That's it with Forex, and let's take a quick look at Bitcoin. Let's see what's happening here. So we did hit that 28,000 again, and then we sold, and we're sitting on the 100 moving average right here around 27,000 as dollar continues being strong. So if in this scenario dollar would continue being weaker and equity going higher, we could see a bounce in Bitcoin or cryptocurrencies in general. And if dollar continues getting strength, we might see a dip here from these levels. But again, these are just speculations. There's not much fundamentals here, unfortunately. And there's still regulators are working on creating some kind of regulations here, and it kind of contradicts the whole idea of cryptocurrencies. So it's very kind of gray area and very hard to apply any kind of fundamentals here. But as far as technicals, just to go back, we hit 30, we refused to go higher. We came back to around 27 and it was zigzagging. As of now, we are making higher highs and we're sitting the support around between 25 and 26,000. So let's see what's next on cryptos. That's it pretty much. I want to thank everyone for attending the webinar. We should be back next week, God willing. And just to put it all together in few sentences, we had good news as far as NFPs. We had great news as far as debt ceiling resolution. We have a few things coming out in the economic calendar this week. And we are getting closer to the Fed's decision on the 14th. And as of now, it looks like the odds are showing around 70% of pause on interest rate increase, which could be good for the market. But then we're having another one in July coming on the horizon, and that depends on the data and what the Feds will decide then. So it's always anticipation of something. There's never just simple old style trading, which makes this market very unpredictable and volatile. And again, the VIX are at the low, and we might see some serious moves on the market with increased volatility. And I want to wish everyone a great weekend, whatever's left of it, and definitely get some energy, get some power for a busy week. All the best. Have a wonderful and successful week. Take care.